Meet up with Craig Irvine, co-head of Asia Research at Daiwa Capital Markets. Morning.
Morning, Bernie.
Happy New Year.
Happy New Year.
Well, that's no way to start off a new year with a dip like that. What the hell happened there?
Well, I think some of the concerns in China are growing a little bit about things like wage inflation, some of the underlying cost pressures. The PPI has been moving in the wrong direction. Probably some concerns about margin compression for a lot of Chinese companies. Our view, however, generally be relatively sanguine towards that. I think that's kind of the part of the normal expectation or the normal adjustments of a growing kind of healthy economy and healthy markets right now.
Has the faucet been shut off, or is it in the process of being shut down? You know, the way they introduced and to mark the Lunar New Year was telling the banks, pull it in. Yeah. Then as the holidays were ending, telling the banks once again, watch what you're doing on working capital loans, on uncollateralized lending, personal lending, that sort of thing. I mean, they're obviously worried. How far are they going to go and actually say that's enough? That's it. Stop, guys. No more lending. Yeah. Take a break.
Well, a couple of tools in their disposal at the moment. You're right. I think they're partly starting to turn the faucet down a little bit. This is actually a relatively seasonal phenomenon. Last year was particularly painful or particularly strong of a cutback they had to do on bank lending. Yeah. This year it's not been as great, but it is still a major concern. But it's kind of built a little bit into the structural nature of planning by the Chinese banks and how they plan out their year. They have their targets, and then they get out and rush out and do it. So their lending tends to be more skewed towards the first quarter of the year, so it's taking a little bit of a pullback right now.
So what do you do at this point? Do you kind of restructure or rethink top down how you approach the China markets? I mean, do you maybe get out of the interest rate sensitives and the leverage plays and go into some other names as a result?
I don't necessarily think so, because I think this is kind of the normal bricks and steps in the wall of worry, as they say about markets. It's a healthy problem to have, is having to kind of pull back your bank lending, as opposed to some of the deflationary pressures that we've seen around some of the rest of the world of late. So we remain relatively positive on the market. The valuations are not particularly stretched. Earnings growth, structural growth, and structural health is still very, very strong.
Is there? We've been seeing a little bit of shimmying around with the yuan. I mean, everybody is still expecting low single-digit appreciation at some time out, but the bets are going up that they're going to make a move on this, and this may be a panacea for all kinds of things. Maybe eliminate one or two layers of the most uncompetitive industries, that sort of thing. Raise the bar for China a little bit. We're seeing like 0.XX percent moves. Don't know if this is really a tacit allowance of a wider band by the safe or what, but the fixing seems to be just ever so slightly, marginally on the increase here.
Well, I certainly think there's going to be, as you said, a tacit expanding in the band and kind of general steady upward appreciation. What I don't think the yuan is itself as a policy tool. It's not, and certainly not a panacea, as you say, simply because it doesn't have as direct of an impact on the other factors at work. For example, the restructuring of the economy towards trying to make it less labor intensive, more value added. Is an automatic is a constant trend for the economy there, and so the yuan is not necessarily as much of the source of all evil if you were a U.S. senator, for example.
Okay. You seem to have a focus on the consumption theme. You haven't lost that. That hasn't lost its attractiveness to you.
No, the consumption issue is still a huge driver in China right now.
What are they doing? Are there policy initiatives that are actually going to make that happen, rather than just they need to make it happen and this is what needs to happen?
Well, there are all kinds of policies that have been going on for various over time, going all the way back to things like the white goods subsidies that were rolled out earlier last year. From a policy perspective, isn't necessarily nearly as important, though, as what the actual Chinese consumer, who is getting more and more wealthy, actually gets out and spend their money. Policy tends to be more longer term in this context, because of the nature that China has among the highest savings rates in the world, and that's largely because they have among the least developed social infrastructure for things like health care and insurance types of things. So the policy is much focused on very long-term factors like that. We put in really good broad health insurance platforms, people will save less and spend more.
Yeah. Last week, with all the influx of mainland visitors during the New Year holiday, I was bamboozled by the number of mainland people just with wads of renminbi shopping at the landmark. I think the great centers of Central and Hong Kong Land should thank them for holding up the rent and the luxury shops. Taiwan, just quickly, on a parting note here, the economic numbers coming in at 9, much better than expected. Is it time to play the export names once again in the Taiwan
cautiously
space?
try to stick with intra-region exports. exports. We remain very, very cautious still on the U.S.-driven export dynamic, simply because the U.S. consumer is still so over-leveraged and will be for quite some time.
Okay.
However, when we look at intra-Asian trade figures, that's actually one of the real bright spots in the economy in the last 12 months or so. And it paints a picture that the Asian consumer and the intra-Asian trade is one of the things that's held the Asian economies up, where outside the big recession.
Don't be latching on to companies that sell all their stuff to Walmart or something like that. Thanks, Craig. Okay? Have a great rest of the week.